Good morning and welcome to Tuesday's edition of the Bubba Show. You know, because again we basically designated Wednesday for Newsweek unless there's something crucial coming out before. Today I want to talk about the unemployment number from last Friday. You know, you got a number which I wrote about, and I said that I would figure it would be very positive and well north of what the expectations were, and it was. The expectation was 170. The number came out at 236. The actual unemployment rate itself dropped 2 or 3 points. You know, I have to tell you that this is a contrived, controlled number that has really only meaning to the Federal Reserve as to when they're going to stop loaning. The bottom line is this. In 2007, there were 7 million people unemployed. Now there's 14 million people unemployed. The downtick in the overall number was a fact of people giving up and refusing to look for work anymore. They're no longer on the unemployment line and they are no longer looking for jobs. They come out of the system. So you're getting an artificially good look at a number that really isn't that good. Now for our economy to improve, this number has to go up by 300,000 to 400,000 jobs a month. This year over last year, we are at a net loss of increasing jobs. So you can listen to the headline numbers all you want, okay? But the headline numbers are not telling you the real story. The real story comes from the Bureau of Labor Statistics, and we're negative jobs on the overall year to date. And that's what you have to see because we had revisions. Now the market did react well to the number. And again, we are not fundamental traders. So what I'm sharing with you today is just information. This has nothing to do with trading. I don't need to trade off this number because fundamentally the jobs numbers stink. They are not improving the way they should be improving. They are not bringing more people to work. Companies are not hiring. They're not adding on because what they figured out throughout all of the trouble is that they're making their current employees work harder. Excuse me. They're not bringing in new help. And that's what we have to focus on. We need a much higher concentration of new jobs. What we really need is instead of Ben and the Fed bailing out the banks, which we're going to talk about Thursday, they need to take and create the war effect to put back to work all these people who aren't working. Because really what's happening, the downtick in the total unemployment number has come from the people that have given up, not from the addition of new workers. Think about it, check it out. But again, for our style of trading, this is just fundamental news, and that's how the numbers are interpreted. The bottom line is the market continues to rally based on the fact of cheap money and not on what the jobs report happened to have been. Remember, the new Average Joe Options call, really good. It's Monday nights. Check it out. If you have any questions, email me at todd@adamesh.com or todd@averagejoeoptions.com. For Tuesday, the Bubba Show. Have a great day.